In this episode of Financial Literacy for Beginners, we're going to talk about when you should get out of the stock market. Cue the intro. Now, I know this is a controversial topic, so I want to preface this first by saying I am not a financial advisor, and any information that you get in this video or otherwise, you should definitely do your own research and do your own due diligence and make your own decisions, informed decisions, which is what we're trying to do right now, help you make an informed decision, but definitely make your own decisions about how to invest your money in whatever you're going to invest it in. So having said that, I want to talk about some times that you should consider getting out of the stock market, or when are the best times to get out of the stock market. I know there's always a lot of conversation about, never close your positions, never, sell out. So I know a lot of people kind of shy away from the topic of selling your stocks and getting out of the stock market. But, there needs to be a conversation about when to actually get out, because you don't just hold your stocks indefinitely. At some point, the whole reason you go into investing is to see a return at some point and use that return at some point. So there must be an end date. There must be a time where you actually cash out and take your money and do what you want with your money. So let's talk about that. When are some of the times that you want to definitely do that? I think one of the first times that I want you to consider taking your money out of the stock market is if you find a better investment. A lot of times we are in investments and following the trend on things, just following the trend of investors or whatever information that we're getting, and we don't second guess it. We just kind of follow it and do whatever we can do to stay with the herd. But I think if you're doing your research and if you do find a better investment for your money and it's not in the stock market and you're getting a better return on your investment, whatever it is, whatever those factors are, if those things align, I think it's a good idea to get out of the stock market and invest in those things. And that can be whatever. That can be investing in yourself. That can be, investing in real estate. There are so many vehicles and so many asset classes we can invest in. So, take your pick. If you can rightfully say that it's a better investment, then there's nothing to say that you can't diversify. So that's one thing to definitely consider. The next thing I want you to consider when thinking about taking your money out of the stock market is if you have a major change in your income. So if you are, for instance, making $2 million a year and you're investing at least half of your income in the stock market or what have you, and that changes to where you're only now making $50,000 a year, and it does happen. This happens to people. So if that happens, then definitely I would consider, reevaluating your stock positions and reevaluating if it's time to take your money out of the stock market for a while you assess, your income, especially if you don't have other sources of income. And this happens, sometimes people are high earners in one particular income, and if that income source gets diminished in some way, a lot of different things happen in that situation where they have to shift around a lot of their priorities. And I think, one of the main things that you can really consider at that time, if that is the case, is your stock positions, pulling some money out of the stock market. Specifically, if you are, at an age or you are at a point where you want to retire, or you're at that point where you're not going to be, continuing your working years that much longer, it's very important that you definitely think about that and consider that. The worst thing that I've seen a lot of times is, people invest for long periods of their life and they get to a point where the market isn't doing or isn't performing the way it used to perform or was performing when they were building their wealth, and it just starts to take their money. And, these things happen in any investment. I'm not just specifically talking about the stock market. I'm talking about any investment. If you're investing in one specific asset class and you are a high earner in one specific thing, and those things change at the time you're about to retire, then that's a really big change in your life, and it's something that you really want to consider. So if you have reached the point where you have a large bank of money in those asset classes and they're changing, and you know you're at the point where you're not going to be contributing a larger amount to those things, then it may be a good idea to pull your money out of the stock market. Which leads me to the next thing. If you have reached your cash out amount, and what I mean by that is that, just as I mentioned before, we're not just investing in the stock market indefinitely. We're not just investing in any asset class indefinitely. You should always have a cash out amount in mind, meaning you should always have a number of, this is when I want to pull out of this investment or stop contributing to this particular asset class of investment when I have reached this dollar amount. And I say that because the way investments work, stock market or otherwise, things fluctuate, things go up and down. As many have seen over the years, there's not a always going up investment. You know, at some point it's going to go down, at some point it's going to go up. So what you don't want to end up with is, you don't want to be the bag holder, or you don't want to get caught with your pants down when those investments are on the decline. So at some point you have to understand what your cash out amount is. And if you understand that and you reach that, be smart and get out of whatever market that you're in. Because if you reach your cash out amount and you see that the market is now going in a downturn, and you are at the point where you won't be continuing too much of your working years, you're just in investment mode, and you look at the numbers and you say, well, okay, I can cash out now and still live comfortably. Based on my cash out amount, I am comfortable with my return. It makes no sense to just indefinitely stay in the market and just lose money. It makes no sense. Even if you're projecting that, oh, it's going to come back up in, you know, a few years or come back up in a few months. You don't know that. You have no inkling of when the market is going to go back in your favor. So if you are at that point, just from my perspective, if you're at that point where you have reached your cash out amount and you have reached the point where you are out of time in terms of where you are with contributing, you know, and that means if you are at retirement age, or if you're just at the place where you're not going to be working a lot or contributing to, you know, your investments that way, then it may be a good idea to pull out. And that's just my opinion. So I would definitely take those things in consideration as times when you want to get out of the stock market. I hope this has been extremely helpful for someone. And until we talk again, I wish you health, wealth, and freedom. So hold up. If this is your first time to the channel, definitely drop this video a like and subscribe if you haven't subscribed already. We really would like to see you back here on some more videos, joining in the conversation, and definitely leave a comment down in the comment box below.